Welcome, and thanks for joining me today on Mortgage Manager Playbook, a podcast for sales leaders who want to improve their team's sales performance and originate more loans. I'm Pat Sherlock, your host. Today's topic is an important one, and that is DEI as a growth strategy in 2025. It's such an important topic. I have the perfect expert to share his wisdom on it, and that's Chuck Sanders. Chuck is president and founder of Diverse Mortgage Services. He's had a long career in our mortgage space. Prior to that, he had Urban Lending Solutions. And prior to that, he was at Pittsburgh Steelers. Of course, I am a Philadelphia Eagles fan, so we have a slight conflict. But outside of that, I'm thrilled to have you today, Chuck. So thanks for joining us.
Oh, it's great to be here, Pat. Thank you.
Well, let's talk about how you got into our world of mortgage lending. And I'm sure it's curious because you were in the pro football space.
Yeah, it was definitely a different path, that's for sure. One thing about professional sports, you don't quit, they quit you. You don't quit them, they quit you. The NFL stands for not for long. So I was playing for the Pittsburgh Steelers, and I realized the career was coming to an end, short career coming to an end, 2-3 years. But with one of the people who are always around, any of these professional teams, you're going to have wealthy people around, coming to practices, hanging out with the Roonies. And I met a man named Bob Murphy. And Bob Murphy was a big guy in Pittsburgh, and he started Lender Service. Okay. Well-known, mortgage servicing company, Value America. So that was my introduction to the business. He told me, hey, if you ever need any, we met while I was playing. He was a big pit guy. And he said, hey, if you ever need any help, let me know. So as soon as Chuck Knoll told me to go home and cut me to coach of the Steelers, he was the first person I called and said, hey, I need a job. So that's how we transitioned from football to mortgage servicing. And mortgage servicing is a lot tougher than football, professional football.
We'll go into that in a second. I'm curious, since you've had such a long career in the mortgage space and you see a lot of lenders and a lot of things going on, what are things that you see that lenders aren't addressing that they should be addressing?
Well, early on, I started in the business in the 90s. And back then it was you go to your corner bank. The person who's handling everything, probably you went to church with or you went to school with. Mm-hmm. It was one-on-one. And while the process was a lot longer, the quality, the care, the personal touch was there, and we lost that. We lost that. And you can't, it's just with times. I'm not saying it's a good or bad thing. I personally think there's a lot of a mix. Yeah, things are faster, things are quicker. As you know, we can go on the phone right now and get a loan. You don't got to walk down to the corner. But, sure. Lenders still got to put the customers first. And that's one thing that I think has been missing when you get to the quick, fast, click, click, boom, boom. I mean, it's still the most emotional purchase you'll probably make in your life. Mm-hmm. Still the most emotional thing when you want trying to stay in your house on a foreclosure, on something mm-hmm. like that. And it's the most important thing when you're trying to raise some money and you want to refinance your house. So I think we got to get back to that old, at least make them feel like they're in your office on the corner and you really care about the most important decisions they're making in their life.
Well, I agree with you completely. And it's just the communication side has changed, but you still need to be face to face, whether it's by Zoom or something. You have to be that personal relationship. So I agree with that. Well, let's talk about the DEI, especially since in reality, it's a topic and mortgage lenders talk about all the time. You know that. They talk all the time about it. But really, and the opportunity is so clear. If you look at the analytics, the opportunity is an untapped market base that they can obviously, in this market, they need volume, but they don't seem to get themselves to it. So let's talk about kind of your thoughts on DEI and how lenders can actually tap into this market opportunity.
Right. Well, as you know, it's just been an unprecedented attack on DEI the last 3-4 years. And if I have to call out a name, I'll call out a name led by people like Elon Musk, who have a lot of resources. And really, if the attack really didn't start and come at banks, it really started at the schools. And it just kind of, after the Supreme Court decision, it just kind of filtered down and around. But unfortunately, it has caused a lot of damage on this side of the track. When I say this side of the track, I'm a minority, and I travel in a lot of circles and churches and groups, and I'm a member of multiple, minority groups, and it has hurt. And the sad part about it, if you really do the research, like you said, you know that it's really based on a false narrative that is really hiding, really just a way to get rid of some competition. The truth of the matter is, when a majority-owned company or somebody in strategy sits there and sees a bank putting aside, or not, I'm not even say put aside, who's directing 20-30 billion dollars towards improving the home ownership gap and hoping close the home
Right.
ownership gap. So they want to use minority-owned suppliers who have a better relationship in those communities. A closing agent. Closing agents are very important. That's the last person you see. That's the person you trust. They put all those papers in front of you, and you're just signing away. And that'd be
Yeah.
nice to have somebody who looks like you or you're familiar with. So it's based on a false narrative that really hurts. It hurts business. There's no negative about diversity in the business. And now when you talk about the banking business, it's absolutely ridiculous for us to even think about it. I mean, I understand. Let's be honest. It comes down to money all the time. If the
Right.
University of Florida decides, which they did, decides that they're going to get rid of their scholarships for minorities based on just color and fire their whole diversity department, which is a shame and terrible. And but they know this: those 10 minorities that were getting a scholarship that month, there's 100 that'll pay to go to the University of Florida. So it doesn't really hurt their bottom line. But if we think like that in the banking, we're throwing the baby out with the bathwater. I mean, you're really ignoring markets that are growing, minority markets that are growing, groups that are economically growing, working with businesses that are going to make more money, hire more people, buy more houses, stay in more houses. It's just a self-defeating thing to accept in DEI initiatives as a negative in the banking industry.
Well, you're exactly right. And that leads to my question, which I don't understand myself, is that in the last few years, volume has been off. We certainly have had some sagas and lenders have sold and all kinds of different things have happened. And reality of it is they need volume. And so our business is predicated on volume. And so it seems as if being the case that they should have made a better direction into a market that really has a lot of upside to it. And then when you overlay the demographics in the country, the numbers are pretty simple, is that pretty shortly it's not going to be a majority white country. So what do you think's going on here of why even this volume market that they are looking for loans that they haven't tapped into it, or is it a different type of sell that financial institutions really aren't comfortable doing?
Yeah, I think it's the latter. I think it's a different
Hmm.
type of sell that they're uncomfortable doing because they haven't worked with or they're not taking the time to
Right.
look at different groups as everybody's not the same. I mean, there's a different
Sure.
approach for different people, and it goes back to what I said in the beginning. Thinking of people, if you're going to go and sell in the inner city of Philadelphia, as you're familiar with, it's different than
Sure.
selling in Lycoming County or out in some county in central Bucks County, PA,
Sure.
and you need to take that into account. Those are things that you just can't put an algorithm on or push a button. Well, nowadays they might can, who knows, with the scan, with everything going on. But you know what I mean. So that's where your servicers really come in. Those loan officers, those appraisers. You hear all the complaints about appraisal bias. Now,
Hmm.
I will say this. I think for the banking and where we're talking about today, the lending world, I'm optimistic. And here's why I'm optimistic.
Hmm.
I think we just got scared because of all the lawyers. I think the lawyers just scared the crap out of everybody, which they do.
Hmm.
That's their job to do it. They get paid a lot of money to come in and tell these top executives at these banks, whoa, put the brakes on your diversity program because you can get sued. And you'll get sued and your name will get dragged down and boom, boom, boom. And so, but what I've seen is it's starting to settle down. And then it was going during an election cycle, and you had
Right.
two groups that were really on opposite sides when you start talking DEI. So that was a lot of big news. And even the groups that were the groups led by the Elon Musk, and I'm not calling his name out for no reason. He's very public about it. The groups like the Elon Musk who are against DEI, once the election was over and they won, they're not really even talking about it as much anymore. It was a hot topic.
Sure.
So the
Sure.
good news is, I think that what I'm seeing, I think what I'm seeing. I mean, we've been fortunate enough to sign contracts with probably 3 or 4 top banks, 3 or 4 of the top 5, 10 banks in the country. And after things settled down, the legalese, I mean, it literally
Mm.
changed things in the contract that said black and brown to, minorities. I mean, just all the little legalese. Now, And we have a unique solution. And the way we always said it, the way I always decided to do work was I always wanted to do first tier work. So I think we'll be okay in the banking as long as we have developed first tier minority owned companies, minority, that have been loan officers, things different like that, who are working directly. Because where you do have a pushback on, I don't necessarily agree with it, but the argument helps make the case for non-DEI as well. Who am I as a bank to call one of my servicers and tell them I gave you 100 orders, you got to give 20 of them to a minority company? That gets rough. That gets hairy. Now you're
Mhm.
talking second tier. I'm sending the work to you. I want a mandate that you send that work to a minority. Well, the middle company now is kicking
Yeah.
back and saying that's bullcrap. They should be able to, So my company from day one was set up to be a first tier supplier. I don't want nobody's leftovers. I don't want second tier. I'll have the technology, I'll have the things, and I have to thank my partner ServiceLink for partnering with me and getting their technology. And that was my strategy, to partner with a Fidelity, a ServiceLink, so I got the best title, the best systems. And now we can go to the bank and say, we don't need a middleman. Can you give us that work first? And what the banks I'm seeing now is that's a solution. And they like the fact that we're in these communities.
So, talk about sourcing of the business. Obviously, the issue really dovetails to when you look at the percentage of loan officers that are minorities, it's still low and hasn't really changed over the years. And my argument is that if you want to have that customer base and you want those loans, you have to have someone like those people in that market. And I thought after the Tried and Mortgage Company law case that that would have really had all lenders fixing that issue, but
Right.
it really hasn't seemed to have done that. Is that your impression?
Absolutely. And I was disappointed. I thought that I agree with you. I thought that outcome would really be a little boost, but it's
Right,
not. But it goes back to some things we just got to understand. It's just the business we're in is just not is traditionally white men. Let's just call it
right.
what it is. It's
Yeah.
white men, then some white women who got into business because of whatever.
Yeah.
Then so we keep going then. And when we get down to here, that list is pretty close to the bottom of
Yeah.
Hispanics, African Americans, let's just be honest. So appraisals, for instance, it's a family business. They pass it down. They pass it down. Loan officers,
Yeah.
somebody knows somebody knows somebody. So what I'm hoping the banks doing, and then I'm seeing some banks do it, opening the loan centers in communities where they could, they want to push their affordable housing programs and projects,
Sure.
and hiring from around that area, working with different minority groups and things like the NAACP and the Urban League to try to bring people into, which is a great career in banking for minorities to make a good living. Is it a challenge? Absolutely. But I will say the attack on DEI in the banking industry, I really think we've seen the worst of it, and now it's going to get back on the uptick. And I don't mean to age you, Pat, but me and you, we remember when we were young, when we were really, really young,
Yeah.
when they had the affirmative action and those things, and
Sure.
then it went away and came back and so things will rename themselves. It might not be, before it was diversity, then it'll be DEI, then it'll be ESG, all that
Sure.
stuff. But I think in banking we'll be okay because at the end of the day, like you said, it's a market we have to tap and we have to use.
Yeah.
It's just it's a no-brainer.
Yeah, I mean, and so talk about and share some of this. The real key issue is the sourcing side, and so talk about from your viewpoint what banks or lenders can do to source these types of loans. And this is where I think the lenders get off track because it is a different. It's not just going to a real estate office.
No, no.
So share what you think lenders should do to originate these types of loans.
Right. Well, first of all, like you said, all these banks have sourcing managers. They have
Sure,
sourcing people. So one, we do got to talk about workplace diversity. They have to look at that because the
sure,
bottom line is more than likely I go to church with people that look like me. I go
right,
to school. Yeah, it's just that's life. That's a fact.
sure,
So if I'm a sourcing manager, I'm gonna start hiring people who I know who are around me. One of the things when I had my first company before I sold it, we were one of the fastest growing companies in the country, but 70% of my employees were minorities or women because that's who I was around all the time. So one, starts getting your sourcing managers to hire more people that look like the demographics that you want to meet. That's
Hmm.
important. Workplace diversity. Vendors and suppliers start hiring more minority-owned title companies, closing companies, appraisal companies, so people aren't worried about the biases and everything like that. And then these programs now, and the media now, you know, God knows. Look, I love Kevin Hart. He's funny. He's a Philly guy. But
He
Kevin
is.
Hart, yeah, Kevin Hart dancing and singing on a commercial.
Yeah.
It gets to a point where, okay, that's cool, but is that really driving business to a
Right.
minority community? I mean, he's a comedian. And so I think they got to
Yeah.
do a little bit better with their media and their marketing, to be more educational and be more, here's the type of loans we're trying to originate with you. For example, there's programs that banks have that a lot of people don't know, but I know for a fact one of the banks we do work for, they got pretty much, they pretty much got a $10,000 down. They're going to help you with your down payment, 10,000. You can move it. So let's say you're eligible for it in Philadelphia, but you want to use it in Miami. There's all kinds. But how do people know about it? No, you're not
Right.
telling no one about it. You're not getting a message out about these loans that we want to originate that can really help you if you're low to moderate income. And that's not a black, white, green thing. That's low and
No.
moderate income. And those
Right.
are stipulated by the government, and they're not going to change that. So I wish I had the answer, but those are the
Hmm.
things I'm seeing after about 30 years in business, that we need to understand that these markets aren't just going to, because you get a commercial and you have Beyonce sing on it, that they're just going to come running and originate a loan. They're going to be like, oh, Beyonce's pretty. Okay,
Yeah.
next. Was that a loan commercial or was it a pizza commercial?
I'm with you on that one. So, and I love Beyonce, but besides that,
But
is that
I don't need her closing my loan or
yeah, right. Yeah, good point. Yeah. So talk about this issue, especially you've been on the back office side for a long time. What are you seeing as trends in the operational side and all of the closing issues that have gone on in the past? Obviously, Dodd-Frank and the LE and CD kind of did away with all that mostly. But what are things that you see that are opportunities on the back end side that really aren't taken advantage of? Example, a lot of times people hire truly operational people, but it can be a selling position. And instead of looking at it as just operational, what are your thoughts on that?
Yeah, very interesting. That's a big part where technology's coming in. I mean,
Mm-hmm.
the technology, especially with this AI, and now right now I see the AI kind of more affecting the decisioning part.
Mm-hmm.
Just because of regulatory laws, as you know well,
Yeah.
you got to have ways to verify a lot of the fraud that's out there and things like that. So, I do think that it was the bank. We have been way too operationally heavy. Okay, the meal, let's get the meal going, get it in here. But just because of the economy, especially because of COVID, nobody's going back to work. Pat,
Yeah, sure.
if you went to Charlotte, it was every other day was a big building contest. Who can build the biggest bank
Yeah.
center, have 1,000 people in there, and all day they're just churning out operations, operations, operations. Well,
Yeah.
because since COVID, and that killed that, and actually that's why companies like mine, they're back to, and it always goes in cycles, they're back to subleasing that workout, subbing that workout. So it's up to companies like ours to come up with innovative ways to sell, to get the consumer. Like we have a great product. I don't want to make a commercial, but we got a great product that for closing alone. It's pretty much like the DoorDash and all that, because it got to be something they're used to. You can get on your phone,
Yeah.
you can hit a
Right.
button, you can say what your car looks like, who your notary looks like, what time works for them. They're on the way. There's a little flag going. All those things now make a big difference in the lending process. You know how it used to be. The closing was
Sure.
and if you're still doing that, you're going to lose customers, you're going to lose market share, and it hurts all of us. So there's a
Right.
lot of work on that back end, the tail end, the closing part. I'm seeing a lot of technology being used for the phones and mobile, and being able to choose who your closing agent is and where and how to meet, and a lot of the documents being scanned and all that, OCR work. So I'm seeing a lot of those things, but we still got a long way to go from it being just operational. It takes a
Hmm.
long time. And another thing is, no one has a attention span anymore. So you're
Yeah.
not going. You got somebody on the phone for 5 minutes. In the first 5 minutes, you better convince them why they should use your bank and why you should do the loan. So a lot of salespeople, more salespeople getting paid higher salaries, more commission on the loans is absolutely going to be needed.
Yeah, I don't see the front part going away at all. So
No.
so Chuck, what other types of things that you see in the next like 3 or 4 years that on the backside of the closing of the loan that are going to come into play?
Yeah, well, another thing that we need to be careful of, and this is related to your question, I believe, is not a technical thing, it's just the environment. I mean,
Hmm.
we got to be careful that we don't start seeing, I don't think it'll be as bad, but a little bit of 2007, 2008, 2006.
Yeah.
After COVID, I mean, for a long time, you couldn't kick somebody out of their house if you wanted to. And I
Yeah.
get it. And I'm not on either side of it, but you could have 8, 9 forbearances and keep pushing it out. And then
Yeah.
you have to go to a courthouse, and the courthouse would push another year. So you can stay in your house for probably 4 or 5 years before you even had to, pay the
Yeah.
piper. And people got slick to that because of social media and all of the hacks, what they call them hacks.
Yeah.
The foreclosure hacks. I think we got to be careful on the loss mitigation side and start paying attention to that. That's going to come.
Yeah.
Loan modifications and all the short sales and all those different things that banks aren't prepared for because they haven't been hiring at all. And
Right.
me and you both know banks don't want to own your home. I mean,
No. Right.
you think, oh, this bank wants my house. It's not the old West where the dirty bank owner's coming to get your house and give it to his daughter.
No.
They don't want, learned that in 2007 and 8 that you don't want
Yeah.
a zillion houses sitting there. And with all the things
Yeah.
that happen with the bad prime lending and everything, I'm really afraid, let me say that. Like we stocked up on being ready for loss mitigation products and services because I think that can hit in a few years.
Yeah, I don't think you're wrong about that. Actually, when I first started in the business, I was in the foreclosure part.
Well,
And
that's a
trust
lot
me,
of fun.
yeah, trust me, lenders don't want them.
No,
So,
you heard it from Pat.
yeah, I can verify it. So, and as a lender, you don't want to be going out there visiting it either.
Oh
So,
no! And then we for a while we were doing the property preservation. Oh
oh
my
yeah,
goodness! You
it's
want to talk
bad.
about make $5 to go get shot at by trying to cut
Good
somebody's
point.
grass,
No,
and
yeah.
they're still in the house. Well, we got a note that they left 6 months ago. No, they're in that house.
Yeah, yeah, I do remember those days in the beginning, that's for sure.
Exactly.
So, well, time has flown by. Do you have a couple takeaways that you'd like to share with our audience that why DEI is really an important growth strategy for
Yeah.
them?
And thank you for this time and Pat for this platform. What I would ask is if the people who are listening, who work at banks, who are in the banks, and who are in executives who I know follow this show, don't be scared. Stand up. I got to give a shout out, and this is public, so I'm not just picking them out. But like Chase Bank, and you have a Jaime Dimon who just doubled down and said, you're not going to bully us, because a lot of it's bullying, scaring these banks and making them think like, oh my goodness, you got to think through you created these programs for a really good reason. And we got a product that I think anybody with any sense, not saying there's not a lot of people in government, in business that don't got sense, but how could closing the home ownership gap, keeping people in their homes,
Yeah.
selling homes, be a negative thing for any country and adding diversity to that mix? I mean, it
Mhm.
just doesn't make any sense for DEI or any type of initiatives for affordable lending to be a negative in our banking industry.
Well, I'm there with you on that one, that's for sure. And it is a growth opportunity that I think
Yes,
lenders really aren't taking advantage of. So,
not at all.
Chuck, how can people get a hold of you?
Yep, diversemortgage.com. That's our company, diversemortgage.com. Please give us a call. And our diversity is about our products, our services, and the communities we work with and our employees that we work with.
Well, I thank you so much for being on. I'll have to have you come back. You've been terrific. And I want to thank our listeners and certainly subscribe to our show and share it with your friends. Thanks so much, Chuck.
Oh, thank you. Behind your back, we call you Sherlock Holmes. We love you. Thank you, Pat.
I'll see you.
Bye
Thanks,
bye.
CJ, too. Bye
I
bye.
will.
Thanks for listening to Mortgage Manager Playbook. You can catch up on all our episodes by subscribing to receive each week a new show. Don't forget to share this podcast with your friends and team members. If you're looking to increase production, call me to discuss my prospecting sales training program, Ramping Up Realtor Referral Sources. Check out my website, www.patsherlock.com.